Imagine a world where the most powerful countries on Earth are quietly rushing to buy the same thing. Not oil, not technology, not even land, but gold. For the past few years, central banks around the world have been buying gold at the fastest pace in modern history. Why? What do governments know that ordinary people don't? And could this global gold rush be a sign that something big is coming for the world economy? Let's find out. In recent years, a surprising trend has been unfolding behind the scenes of the global financial system. Countries across the world are dramatically increasing their gold reserves. Central banks, the institutions responsible for managing a country's currency and financial stability, have been buying hundreds of tons of gold every year. In fact, 2022 and 2023 recorded some of the highest central bank gold purchases in decades. Countries like China, Russia, India, Turkey, Poland, Singapore have all been aggressively increasing their gold reserves. But this raises a critical question. Why now? Gold has existed for thousands of years, so why are governments suddenly rushing to buy it again? To understand that, we need to look at how the modern financial system actually works. For decades, the global financial system has been dominated by one currency, the US dollar. After World War II, the world agreed on a system where the dollar became the main global reserve currency. Most international trade, including oil, commodities, and global business transactions, is conducted in dollars. This gives the United States enormous economic power, but it also creates a risk for other countries, because if a nation becomes politically or economically opposed to the United States, access to the dollar system can suddenly disappear. And this is not just a theory, it has already happened. One of the biggest turning points came after Western countries imposed massive financial sanctions on Russia. Russian assets held in foreign reserves were frozen. Billions of dollars became inaccessible almost overnight. For many governments around the world, this event sent a powerful message. Foreign currency reserves are not always safe. If your reserves are held in another country's financial system, they could potentially be blocked or frozen. Gold, however, is different. Gold is a physical asset. It does not depend on any government, bank, or digital system. If a country owns gold and stores it within its borders, no foreign government can freeze it. And that realization changed the way many countries think about financial security. Another major reason countries are buying gold is protection against economic uncertainty. In recent years, the world economy has experienced rising inflation, global debt reaching record highs, currency volatility, and geopolitical conflicts. When inflation rises, paper currencies lose value, but historically, gold has often maintained its purchasing power. This is why gold is commonly called a safe haven asset. During times of crisis, investors and governments alike tend to move their money into gold, and central banks are no exception. They use gold as a financial insurance policy. There is another important factor driving the global gold rush. The world is slowly moving toward a multipolar economic system. For decades, the global economy was largely dominated by Western financial institutions. But today, emerging powers such as China, India, Brazil, Russia are becoming more influential. Many of these countries want to reduce their dependence on the US dollar. One way to do that is by increasing gold reserves. Gold can support currency stability and give countries greater independence in global finance. Some analysts even believe gold could play a role in future international payment systems. For central banks, gold is not just a symbol of wealth, it is a strategic asset. Gold offers three key advantages. First, it protects against inflation and currency devaluation. Second, it reduces reliance on foreign financial systems. And third, it strengthens confidence in a country's economic stability. This is why central banks treat gold as a long-term reserve asset. They are not buying gold for short-term profit. They are buying it as a financial shield for the future. The massive gold purchases by central banks may signal something important about the future of the global economy. It suggests that governments are preparing for a world where financial systems may become more fragmented, geopolitical tensions may increase, and currencies may become less stable. In other words, gold is becoming a form of economic insurance in an uncertain world. And when governments start preparing for uncertainty, it's usually worth paying attention. Gold has survived empires, wars, economic collapses, and currency crises for thousands of years. And now, once again, it is quietly returning to the center of the global financial system. The real question is, do governments know something about the future that the rest of us don't? Because if countries are rushing to secure gold today, the global economy of tomorrow might look very different from the one we know now. If you enjoy deep insights about global business, economics, and power shifts shaping our world, subscribe to the Business Archive. Because the biggest stories in global business are often the ones happening quietly behind the scenes, and we're here to uncover them.